Hey, everybody, and welcome back. Florida Stacker here, and welcome to episode 1 of the Florida Stacker Show. This is a new weekly video series where I'll cover important news, views, and topics driving the precious metals market. Each week, we'll review opinions published by financial news outlets. We'll cover precious metals and the global economy. We'll also bring you with me on my own personal wealth retention and wealth accumulation journey as a precious metals stacker and dividend paying stock investor. So each week I'll open new purchases of precious metals. We'll do a review of those purchases with you to hopefully spread awareness and knowledge for active and aspiring precious metals accumulators on what to look for and also what to avoid. Together we can share our personal knowledge and viewpoints through the comments section below in this video. Also, at the end of each week's video, I'll address questions and comments from viewers from the previous week's video, as well as open up some mail received from other precious metal stackers, accumulators, investors, as well as just fans of the channel. Now, before we go any further, it is important to note that I am not a financial advisor. I am, however, a husband, a father, and a very proud military veteran. I'm determined to build a brighter financial future for myself and for those that I love. I'd like to thank you for taking the time out of your busy day to be here, and please do consider liking, sharing, as well as subscribing and hitting that bell notification icon so that you never miss a new video. Now, from a macroeconomic perspective, I am sure that you are aware of the massive impacts of the COVID-19 virus. The financial impacts of the global shutdown have created many new increases in the global money supply, okay? This has impacted every nation and people around the world of all creeds. Reserve banks from across the globe have been printing fiat currency in droves. This has created trillions in new debt in order to pump up the world's economies and hopefully get commerce moving again. These policies include unprecedented, that's a common word in 2020, interest rate cuts, and government-promoted attempts to increase inflation. We'll get deeper into that in the future videos with this series, but let's move on to the markets and an article recently published covering the precious metal gold. Okay, this article today was written by Elena Mesneva and Justina Vasquez of Bloomberg News and was published on August 28th, 2020. The link will be found below in the video description section. The article states that gold climbed, recovering from Thursday's drop as the dollar sank, with investors weighing the impact of the Federal Reserve's new approach to setting U.S. monetary policy. The yellow metal rose the most in almost 2 weeks, and the dollar touched a 2-year low, a day after Fed Chair Jerome Powell said the central bank will seek inflation that averages 2% over time. His comments sent bullion on a roller coaster ride in the previous session, as he signaled the central bank will stay accommodative for longer, with a more tolerant approach on inflation, but will not hesitate to act if consumer prices rise considerably above its goals. Okay, so why is this big news? Well, outside of the fact that the dollar has reached a 2-year low, it's big because it gives precious metals stackers and investors in all asset classes a glance into the Federal Reserve strategy to propel the U.S. economy forward. Why it's so important is that the Fed chairman states that the Fed will take a more liberal policy on combating inflation. For those of you watching that are unfamiliar with what inflation is, it is a general increase in the prices of goods and services due to the fall or reduction in buying power or value of a currency. Currencies being the dollar, the yen, the pound, the euro, for example. More simply put, inflation means it will take more dollars to buy things and pay for services in the future than it does today. It is important for you to understand that $1 today will be $1 tomorrow, but it will not have the same purchasing power in future years, so it's not a great idea to preserve your wealth over the long term in currency, which erodes away. All of them do. At minimum, you would want to invest your money, that is your currency, your dollars, your euro, your pesos, whatever currency of your country, you would want to invest your money in assets that keep up with the rise of inflation just to at least maintain the true value of your savings account. So back to the article, gold strengthened Friday due to a more measured appraisal of the shift in Fed nuances, along with a weakening dollar. For the same reason, Rona O'Connell, head of market analysis for EMEA and Asia regions, a StoneX group, said in an email note that higher inflation tolerance and low interest rates should see U.S. real yields fall in the medium to long term, which is supportive for gold, said Vivek Dar, an analyst at Commonwealth Bank of Australia. Still, the fact that the Fed will also act if there are inflationary pressures adds doubt to how high U.S. 10-year inflation expectations can reach, he said. So, this is my viewpoint once more. You may be wondering why inflation is bullish for precious metals. And to put it simply, when the value of the dollar decreases, the value of gold conversely increases. Also, low interest rates create a situation where more traditionally safe investments, such as investments in government-backed bonds or bank certificates of deposit, well, they now offer less reward. The opportunity cost of locking up your currency in them becomes less appealing as they now offer lower rewards over the same time period. So, a Fed policy of promoting inflation is a bullish sign for gold and silver, especially. Back to the article, spot gold jumped 1.8% to $1,963.41 a troy ounce by 1:51 p.m. in New York, heading for its first weekly gain in 3 weeks. The metal is down more than $100 from a record set earlier this month as risk on sentiment improved. Yes, that's right, it is down about $100 from its peak of a couple weeks earlier, but it is still one of the best performing commodities this year after the coronavirus crisis and massive stimulus measures boosted demand for havens. Gold futures for December delivery rose 2.2% to close the week to settle at 1974.90. The Bloomberg Dollar Spot Index also dropped 0.9%, so almost a full point on the day, to the lowest since May of 2018, while U.S. equities also rose. Typically, during times of decreasing value in the dollar, it's also very beneficial for the stock market. Economic confidence in the euro area continued to improve in August. Data on Friday showed, but job cuts in recent months across the European continent meant consumers remain worried about the labor market. In the U.S., the rebound in consumer spending slowed in July as virus cases rose in some states. So that's an important takeaway there. The rebound in consumer spending slowed in July. This is paramount to the Fed's decision to attempt to increase inflation. Keyword attempt here, right? In general, when consumers are not spending, prices for goods and services decrease in a capitalist society of competition. Just think about it for a second. Here in the Western world, we usually, keyword usually, have choices. Do you want to drive a Chevy or a Ford? Do you prefer to fly with Delta Airlines or American Airlines? I think you get the point. Competition during periods of economic turmoil usually results in sales or price cuts to promote consumer spending. Now, let me talk to you as an individual for a second. If you believe that prices will decline over time or deflate, as they kind of have been in some areas of the market, this is the opposite of inflation, known as deflation. As a potential spender, and in your case, because you are here right now, you are an informed potential spender, you are now less likely to spend your currency and contribute to the financial economy out of fear of overpaying. It's put pretty simply, if you think prices for assets are going to go down, you're more likely to hold on to your currency now out of fear of overpaying. When people are out spending, however, businesses begin to turn profits, which typically results in corporate investments to grow their company, which also includes hiring more people to work for the company. More employed people results in a better quality of life for all people in that nation, where individuals are able to earn, spend, save, and also invest for their own futures without government assistance or interference. With over 10 million Americans, however, still unemployed, these Americans are relying on the government to keep them afloat. As such, they are not paying income taxes, which support government initiatives and businesses, and without the business, will ultimately let more people go from unemployment, resulting in the need for more government assistance and less tax revenue. If there is anyone out there looking to buy a new house, for example, it doesn't have to be new, but a house, if you believe that prices in your area, the area you're shopping for at least, will decline in the future and you're currently holding out, you are now essentially fighting the Fed. The Fed wants to promote your desire to spend, and one way they do that is with inflation. They want you to believe that now is the time. They want you to spend your currency now to improve the economy because prices for assets in an inflationary environment will be higher in the future. Now back to the article. The Fed's shift to let inflation and employment, run higher may signal that policymakers will keep interest rates low for years to come, lifting the appeal of non-interest bearing gold. There's still room for bullion to set all-time highs, although that may take time, said Ole Hansen, head of commodity strategy at Saxo Bank AS. Powell's speech did not threaten the bullish narrative for gold and silver, Hansen said. Low interest rates for longer, a weaker US dollar, massive amounts of stimulus, and the increased demand for inflation hedges are likely to continue to drive demand for both metals. That's right. As you know, when the dollar goes down, gold goes up, silver tends to follow silver. Therefore, both metals are hedges against inflation. The biggest risk to gold remains the discovery of a vaccine and a sharp correction in stocks, which would spark a drive to raise cash. Okay, what Hansen means here is that a vaccine, in theory, will rapidly reduce the fear index here in the economy of contracting or getting the COVID-19 virus, getting hurt by the virus, or hurting someone else, which will be explosive for the economy and stocks in businesses and very bearish for gold. It means those that are holding precious metals now may consider liquidating or selling in order to purchase stocks, which will drive down the value of precious metals and propel the stock market forward. All right, let's take a look at an article on the precious metal silver written by George Lamb and published by City Index of Gain Capital on August 28th. Spot silver saw volatile trading on Thursday. However, the price swings have not damaged silver's bullish consolidation pattern. On Thursday, Federal Reserve Chairman Jerome Powell said that they will seek to achieve inflation that averages 2% over time, meaning that following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. Even though his speech may not be as dovish as some investors would have anticipated, nevertheless, he signaled that the Fed's monetary stance should remain accommodative for a considerable period of time as inflation has been subdued and well below target. Industrial metals are expected to benefit from low interest rates and ongoing economic recovery, so that is bullish for silver as well as the platinum metal groups. Spot silver saw volatile trading on Thursday as it marked a day high near $27.90 before closing down 1.8% at $27 flat. However, from a technical point of view, the price swings have not damaged silver's bullish consolidation pattern as shown on the daily chart. It remains trading within a symmetrical triangle pattern after a recent rally. The level at $25.30 may be considered as the nearest support level, while the first and second resistance levels are expected to be located at $28.45 and $30 respectively. Wow. Alternatively, losing $25.30 may suggest that the next support is at $23.45 and could be challenged. Okay, so here is my take on this. What's good for the goose is usually good for the gander. And in this case, what is bullish for gold, the world's premier monetary metal, is also good for silver, the other monetary metal. Now, please listen closely. Silver is a monetary metal. People turn to gold and silver as a safe haven investment. However, it is also an industrial metal, and approximately 65% of all silver mined is used not for coins, not for bars or rounds, but for industry. And right now, industry is suffering due to the COVID-19 pandemic. This is one reason that when industry declines, as we have witnessed this year, silver does tend to take an immediate hit, which it did in March, dropping all the way down to the high $11 mark in valuation. But as the dollar continued to weaken since that time frame and inflation increases investors, typically finding gold to be too expensive, people turn to silver, okay? Silver tends to start a bull run behind gold, and we have witnessed that this year. This news of increased inflationary measures is also bullish for silver, even though it is a hybrid metal. All right, so that's some latest news on gold and silver. Now let's take a look at some silver purchases that I picked up over the last couple of weeks. All right, so I did purchase 6 silver coins from Apmex last week, and they did arrive. For those of you that are new to my channel, or for those of you that are new to accumulating precious metals, I'd like to give you some advice, and that advice is to seek out your local coin shop if you intend to become a precious metals stacker. And the reason I say that is because you're going to find the best prices, typically buying and selling from a local coin shop. Now, local coin shops could be not just necessarily for collectors, but also bullion dealers themselves. It's become a lot more popular over the last couple of decades, getting away from more of the numismatic coins and more towards bullion coins, bars and rounds that tend to track very closely to spot price. So I did pick up 6 coins from Apmex, and I'll go ahead and show those to you now. And I like to accumulate a couple of ounces, at least 2. This week was a little bit better because prices and premiums have come down a little bit, and I did take advantage of a sale of silver. So got 6 ounces to show you here, and the first one is another 2020 Canadian Maple Leaf. And for those of you that have been following my channel for some time, you know earlier this year I did stack an entire tube of 2020s. These tubes here are the old retro Royal Canadian Mint tubes. They hold 20 silver coins, so 20 ounces of silver in here. Today that's worth more than $600 US in equivalent value. So I'm going to go ahead and show you another tube that we've been working over about the last month. And this tube has 1, 2, 3, 4, 5. So 5 additional 2020 Canadian Maple Leafs are in this tube. So we'll go ahead and open up this package and add another silver coin to the tube. And the reason I'm doing this, the reason I'm stacking silver as a part of my overall financial strategy is because I want to retain my wealth. If you listen to the things that I was telling you earlier, we're in a soon-to-be higher inflationary period. We've already seen a massive expanse of the global money supply, and typically as the currencies around the world begin to devalue, a hedge against that is purchasing physical gold and silver. Now, many of you are probably wondering, well, why can't you just go and buy a silver ETF, okay? And the reason behind that, if you're trying to cover your financial 6, is you don't want to be overly exposed to counterparty risk. And counterparty risk is when you put something else in someone else's hands. For instance, when you go to the bank and you deposit your fiat currency into the bank, you are essentially giving the bank control of those assets, right? You're telling them that you want them to hold that for you. Of course, that comes with some fees, but it does also come with a level of convenience in that you can use a debit card or write a check. Okay, so since I'm heavily invested in both the stock market as well as some real estate, I needed something that I could liquidate quickly that would be a good hedge against a devaluing dollar, also something that could do well in a low interest rate environment. And that's why I began stacking silver about 1.5 years ago. All right, so I got another coin here for you, and this one's from the country of Australia, and this is a 2020 Australian Kangaroo. This is the most common bullion coin from the country of Australia, and you could pick these up for a little bit better of a price than you can the American Silver Eagle or the Canadian Silver Maple Leaf. Now that's not always the case. I have been trying to finish a tube of 20 of these Australian Kangaroos. So we'll go ahead and set that down for a second and get this tube. I grabbed these 5 Australian Kangaroos from, I think it was, SD Bullion, about maybe 2-3 weeks ago. So we'll go ahead and grab this 2020 Kangaroo and we'll add it to the stack. All right, but we're not done because we've got more. All right, so here is the second 2020 Australian 1 ounce silver Kangaroo in BU condition. And just to kind of follow up on what I said just a moment ago, with a lot of my wealth, a lot of the assets that I've invested in over the years, tied up in the electronic form, right? You know, you can look at the digits on the screen and see how much fiat currency you have in the bank, or how many stocks and what their current value is based on their changing prices. It's not anything that you can hold. And I personally like to be my own bank. I like to keep a large amount of my personal savings, that's my liquid savings, in physical, tangible, precious metals. And these silver Australian Kangaroos, they do offer, as mentioned, a little bit better value getting in them. I would caution you, however, if you are in North America, not to concentrate too heavily on foreign sovereign coins, because there are many coin shops out there that view a lot of the foreign coins in a similar fashion as a generic silver round, which usually means when they're going to buy them back from you during your time of need, when you need to move back into fiat currency, whether that be to retire, to pay for your child's education, to make a major purchase, or to diversify into other asset classes, you want to make sure that you're going to get the intrinsic value, obviously, of the silver coin, but also as much of the premium back. And so if you're looking for the most recognizable coin in North America, if you're here in the United States, for instance, then you want to look no further than the 1 ounce silver American Eagle. All right, now these are in BU condition, and these are random dates. And when you order a silver American Eagle, or any other coin that is, as a random date, you're going to receive whatever year that particular dealer has an inventory. It does not mean that you're going to get, let's say you order 10 random silver American Eagles. You're not going to get 10 different dates. You're just going to get whatever they have. It's not going to be the most recent year, which is 2020. Now, these coins here have had a very high premium over the last approximately 6 months due to their high demand, their notoriety. That is, they're very well received by both individual buyers and sellers, online bullion dealers, even pawn shops, but especially your local coin shops. So I like to pick up about 2 of these per week. This last week, there has been a reduction in both spot price earlier this week, as well as the premiums on American Silver Eagles. So I did go ahead and pick up 3 of them. So here's the first one. I'll go ahead and add these to this tube, which now has 1, 2, 3, 4, 5 random date silver American Eagles. So you can see what I'm doing here. It does take time. It takes discipline, right? It takes discipline. That's the key word. You can't overspend. You can't convert too much of your fiat currency into precious metals and then not be able to pay your bills. You definitely need to keep some fiat either in a savings account with your local financial institution, or like I like to do as well, by being my own bank on my persons, or tucked away someplace safe where I can get to it if I need it. All right. And you just need to prepare yourself for the unexpected. And so by having both some savings in the bank, as well as savings, near you in both the fiat form as well as precious metals, having a diversified stock portfolio in some growth stocks as well as dividend paying stocks, and even some of the newer asset classes out there like Bitcoin, as well as real estate, I think you'll be in a better position to protect yourself against all of these unexpecteds, right? No one saw this pandemic coming, at least no one I knew. And due to that, a lot of people were caught off guard. And if you start stacking silver and gold, as well as diversifying in some other areas, and you make routine purchases, you dollar cost average, you'll tend to do pretty well. At least that is what history has shown us. So there you go. You've got a few more silver American Eagles random dates here in this tube. We've got 1, 2, 3, 4, 5, 6, 7 now. This tube will hold 20. So next week, I'll have a couple more of these silver American Eagles, as well as some other stuff to show you. And we'll continue to retain our wealth in precious metals. All right, so let's go ahead and get the cap on this tube here. And let's move to something new, which I have yet to show this channel before. And that is a new brokerage account that I opened back on January 9th of 2020 with an initial deposit of $3,500 in order to start building a new IRA. That's an individual retirement account. This is a Roth IRA in dividend paying stocks. So let's take a look at that now, and I'll give you the reasons behind it. All right, so those of you that have been subscribed to my channel for quite some time now probably realize that I've concentrated mostly, as we look here at the periodic table of elements, on these 4 metals. Now, I don't currently own any palladium, but it's definitely something that I'd like to hold in the future. So this is something definitely new to my channel, but I'm hoping that my hardcore stackers and precious metals investors out there can hear me out. I do prefer a diversified approach to wealth, and I cannot put all of my eggs in one basket. As a long-term value investor, in order to help me reach my personal financial goals, I did open up a Roth IRA on January 9th, and I started initially with a deposit of $3,500. The reasons for this decision were to help me reduce my income taxes and invest in dividend-paying companies, which I hope will provide regular payments of currency to me in my elder years so that I may retire early, hopefully travel with my family, and live a general higher quality of life as I age. So let's take a look at my small dividend portfolio through TD Ameritrade, which has a balance today of just over $8,000. All right, so I'm not a pro stock market investor here, guys. What I wanted to do was start by building a base in several stable companies that all pay a dividend during a different month. That and add a few monthly paying dividend stocks or bonds to aid in my passive income strategy. The opportunity here is that each purchase will come with years of dividend payments that I hope will one day offset my salary and allow me to hold on to my precious metals and not be placed in a situation where I am forced to liquidate them too early in order to retire at an appropriate age. I'm now in my early 40s, and there are a lot of things that I want to do and experience in this life, and I know that much of it requires the cash to do so. So my plan here is to not make excuses, but to plan for the future and allow these dividends to reinvest themselves in more shares of these companies for the next 20 to 25 years. Now, each time a dividend is paid, it will buy more shares of that company, resulting in what I hope to be a larger dividend paid out, that is, during the next quarterly or monthly dividend payment. So in 20 to 25 years, I will turn off the DRIP or dividend reinvestment program or plan for each of these companies, and the dividends will then come directly to my checking account in the form of cash. Of course, this being a Roth IRA, these payments will not be taxed as I'm investing post-taxed or already taxed income into this account. I'm hoping that over the next 20 to 25 years, I can create enough passive income that with my military retirement pension, I can retire early and with enough cash to maintain a higher quality of life. So let's get started. All right, so looking at my account positions here, as mentioned, I did make an initial deposit of $3,500 on January 9th, and I have consistently invested $125 to $150 per week since then. I've got 6 positions, and on the top there you see the ticker symbol BND. I have 17.1 shares. That is a bond ETF. An ETF is a combination of different bond funds that are all rolled up into one electronic traded fund. It currently goes for $88.20 for each of these shares in this bond fund. And you can see that since I started this position, the fund itself is only up $15.76. It was up $1.20 as of Friday. So it's held its value throughout this entire pandemic. And you'll see that more clearly here in the next chart. I also just opened up this position in CVX. Now that's Chevron. You've probably heard of Chevron if you live on this planet, one of the largest oil and gas plays in the world. Now, a lot like silver was for many years, oil is down. It's been beaten down by some trade wars between obviously Russia and the Middle Eastern countries, OPEC, as well as some pressure from other nations, and the United States, of course, reaching energy independence over the last couple of years hasn't helped. But I like to buy from a value investor standpoint, and so I only have one share right now, but keep watching these weekly updates and you'll see this begin to grow. And the plan is obviously to buy low and hold for 20 to 25 years. And CVX or Chevron does pay a very healthy dividend. While there is, obviously the risk of more downside, Chevron holds a whole lot less debt than some of its industry peers. And I thought, with it having basically a better balance sheet, having more equity, less debt, that it would be better positioned to survive any further economic impacts to the energy sector. So went ahead and started there. Number 3 is Coca-Cola, and I currently have 34.282 shares of Coca-Cola. You can see that most of these, with the exception of Chevron, have already paid me a couple of dividends, some of them monthly, some quarterly. Coca-Cola, Chevron, those are both quarterly. BND is a monthly paying ETF. So Coca-Cola, you all know Coca-Cola, very well diversified food and beverage company, a company that can withstand just about any kind of market downturn. Now, The stock itself is now up $21.94 since I began investing, but I did see a $54.85 gain on Friday. Obviously, stocks benefited well from the Federal Reserve news that they were going to promote inflation. All right, a weaker dollar is also very bullish for the stock market. Please keep that in mind. So we did see a big rally on Friday, gaining $54.85. That position is now up $21.94. All right, so Coca-Cola does pay quarterly, but that moves us on to my real estate stock position. This is an equity position. It's not an ETF. And this is known as the monthly dividend paying stock. If you've been investing in the market, you probably know of Realty Income. Realty Income holds a large portfolio of very well managed and strong tenant paying. That is, you're not going to run into a lot of risk here with Realty Income on tenants not paying their rent, okay? A lot of this is in commercial properties. I have 26.416 shares of Realty Income. As of today, it's trading for $63.44. My profit and loss since opening this position is now $114.64, and it was up $24.83. Realty Income, it is a little bit more, it tends to be a little bit more volatile than the other funds that you see here in my account, the other stock positions and bond positions. However, it's doing pretty good, especially with this news from the Fed. It does pay a monthly dividend and has paid a monthly dividend for a long time. I think we're coming on 30 years, getting close to 30 years. I'll go into more individual in-depth on each of these in future videos, but I love Realty Income. This is definitely a stock that I will never sell. It will continue to pay me a monthly dividend and hopefully help me reach my goals. So then we move to the ticker symbol SO. I have 30.216 shares of Southern Company. And Southern Company hasn't done as well, as you can see by the P&L there. I'm now down $178.40. Did have a $6.65 gain on the day. Shares of Southern Company are going for $52.42. Southern Company, for those that aren't aware, is I think the second largest, second or third, I'd have to double check that, utility service provider in the United States. Real big presence in the southeastern United States. So utilities are obviously something everyone needs power, especially to run all their mobile phones and computers, gadgets and gizmos today. And if you live in the South, you definitely need that air conditioner. So I've got some shares here, about 30 shares of Southern Company. Going to continue to accumulate Southern Company, and hopefully we can figure out what's going on with this utility. But hey, I'm picking up shares at a better value right now with them being down, and the yield is pretty good, which we'll see here in just a moment. And then we move finally on to my last position in this IRA account, and that is T, which is AT&T. Now, AT&T is the largest cell phone provider in the world. Their network is bigger than any of the others. Verizon's pretty close. I think this new T-Mobile Sprint merger, that may position them as the largest in North America. I'm not quite sure. It's like the airlines, right? Every year there's a new one. Oh, same airlines, but they all kind of trade positions as far as which airline is the largest airline in the world. So AT&T pays a very healthy dividend, currently trading for $30.40, overall down $40.69 since opening this account on January 9th, but did see a $25.52 gain on Friday. So all in all, I had a $113 profit or gain on Friday. Not really a profit. It's not realized. I didn't sell anything. It's just what the current value is. And my total is now negative $67.21, which is amazing considering I was down more than $2,000 there after this pandemic really got going here in the United States and the economy began to shut down. So we've seen a pretty strong gain in this account during that time. All right, so we've got now $8,149.96. I've got $36.66 in cash. So let's move to the next slide, which will give you a better idea of how these positions have been performing. All right, so these are the micro charts. It's a chart provided by TD Ameritrade if you have an account with them. And let's start with Coke, and this is year to date with a monthly frequency. And you can see that Coke, $48.23 at the beginning of the year when I created this account, it was trading closer to $60. We did see that massive sell-off in March, and Coca-Cola is beginning to make its recovery. So as a value investor, as a dividend investor, this is a good thing. I'm able to pick up a lot more shares now at a better valuation than what it was during the lockdowns. And if you know Coca-Cola, you know that people still like their snack foods, they still like their beverages. I don't see any problems here with Coca-Cola. It's definitely a stock that I'm proud to own and will continue to own for many years. And then we move on to Realty Income, and you can see the same situation applies here. Realty Income was trading near $80 at the beginning of the year, now trading at $62.50. We saw that massive sell-off in March, and it is also beginning to climb back up. So I've been dollar cost averaging, and now I'm in the green, and I'll go ahead and continue to pick up shares of Realty Income each month as I make more and more deposits. Now, Southern Company, was also trading around high 60s at the beginning of the year and is now in the 52.20 range. It has not seen the same recovery as some of these other stocks. So I'll take a closer look at Southern Company and try to figure out what's going on. I haven't honestly paid too close attention to all of these shares because I'm such a long-term investor in this account and I'm really looking for income. And we'll get to that in the next slide. That moves us to not T-Mobile, but AT&T. That T really gets me. And right now, $29.90. You can see that big sell-off again in March. It hasn't been quite the, we haven't seen the retracing here with AT&T. AT&T does have quite a bit of debt due to some recent purchases. However, its yield is just incredible, and hopefully it will also help me reach my goals. So then we've got the bond fund, and you can see that even the bond ETF took some dips in April during the economic shutdown, but overall has maintained its position above the line for the year, so it still remains in profitable range. And then lastly, Chevron at $84.91 was trading around $120 when this all started, and you can see that it had a pretty big sell-off and did start to see some recovery, but has kind of tapered off. And that's great for me because I'm going to be looking to pick up a lot more of Chevron here going forward. All right, so now let's move to the main thing I want to show you here, and that is the income estimator. TD Ameritrade does provide this to you, and you can see here that my Florida Stacker positions, I've got 6 different positions, and right now the dividends that all of my positions will pay me annually accounts to $352.89. You can see that each month that dividend does fluctuate slightly. You really kind of have to look past the December, January. You see that big drop off there for January 2021. And that's because AT&T, they do pay a dividend in December. And so you're going to get that bigger dividend in December instead of January. So they do pay that out a little early. It should be in January. So that's why you see that change there. And as I build this account, I'm going to try to smooth it out to try to keep my income each month round about the same. And that is so that when I'm in my older years and I turn off the drip and I'm no longer buying more shares with my dividends, I'm actually using those dividend payments to, pay for my life. I can have a rather steady income stream month by month. I don't have drastic swings in how much money is being deposited to my checking account, each month. So you can see I've got it fairly well smoothed out right now. It does, require some work. I'm earning on average $29.41 in dividends per month. And as I continue to buy more shares, that's obviously going to go up. So I do have a 4.39, if you look over towards the left, a 4.39 average dividend yield for this populated list. So with a target inflation of 2% and me earning 4.39%, that puts me at 2.39%. Of course, this is all theory right now. Over inflation, so the value of my currency is increasing over inflation in this scenario. Now, obviously, I'd like to see some growth in these stocks as well as the increase in the dividend payments, and only time will tell if that happens, but I feel pretty confident with where I'm at. Also, you can see the different dividend yields that each of these shares pays. So let's start from the top with AT&T. You can see the next payment date will be November 2nd, 2020. It's currently earning 6.92%, or it pays 52 cents per share. I've got 50 shares approximately, and that is paid out quarterly. The current market value is about $1,500, and a $1,532 position in AT&T does pay out a little more than $100 a year for holding those shares. So without going into too much detail on the others, you can see that the yields here are all um, pretty good with the exception of the bond fund, but I did want to add some bond exposure to this IRA to kind of protect me from any kind of massive sell-off in equities. If you remember the micro charts on the just before, you saw that bond has really held up during this pandemic, whereas all of these equities did sell off. So this is just the beginning. We've got a little more than $8,000 in this account. It is an IRA. It does have a $6,500 annual contribution limit. Fortunately, when I made that $3,500 deposit, that was for 2019. You are usually able, I don't know of any case when you can't do this, but typically if you haven't reached that full $6,500 contribution each year, when the calendar year rolls over, so when 2019 rolled over to 2020, between January 1st and April 15th, usually when taxes are due, you can continue to contribute to the previous year. So that's what I did. I put that $3,500 towards the 2019 allocation. So I do have room to contribute more for 2020, and I'll stick to it. $125 to $150 a week. Stay tuned. Let's watch this thing grow. Okay, so now let's move on to probably my favorite part of this entire video, and that's going to be the questions, answers, and mail call. All right, let's get started. All right, so I did get 2 letters in the mail this week. If you'd like to send mail my way, please check out the video description section where I'll have my P.O. box listed. You can send me a letter, and I'll talk about it here on the channel. So I got this here from Fish, the Inefficient Stacker. You all know Inefficient Stacker if you haven't subscribed to his channel, and you especially like accumulating, purchasing, holding fractional bullion coins, old world gold coins. He's got a great stack of like old Mexican coins, European coins, obviously a lot of American coins, rounds, silver bars, old constitutional pre-1933 American gold coins, as well as your more standard bullion American Eagles, and many other different gold and platinum and silver coins. So he sent me these 3 stickers, actually 4 stickers. Wow, thanks Fish. Look at all these beautiful stickers. So the Inefficient Stacker, go ahead and give his channel a view. If you like what you see, please do support the Inefficient Stacker by subscribing to his channel. Now, one thing that Fish and I have in common is we were both airborne qualified. Now, I think Fish did serve in an actual airborne unit. I'll let him leave a comment below about that. I myself, I only did 6 total jumps during my time in the Army, the 5 qualification jumps, and then I did have 1 training jump. That's it. I was never assigned to an actual airborne unit, even though I am airborne qualified. All right, so Florida Stacker, you were one of my very first comments on a video, which I remember because I had watched your channel for some time. It was very cool and encouraging, and I still watch every video you put out and appreciate your straightforward, honest approach. When I found out you were jump qualified, I knew I liked you for a reason. Keep up the great work and content. Airborne Fish. All right, airborne all the way. Thank you, Fish. I appreciate you sending me this, and he did actually attach a mercury dime to this letter. So I'll go ahead and get something else out to you, Fish. I think I did get some channel stickers out to you. I'm a little behind on my videos. Thank you for participating on my channel, and thank you for all the support. I truly mean it, and I know that you're another Floridian, and I look forward to continuing to watch your channel grow, buddy. I continue to look forward to working with you as well on content in the future. All right, so the second letter I got is from a fairly new YouTube content creator in the stacking community, but he's definitely coming on strong. And I got this letter from none other than the Platinum Beast. Please give a check out, especially if you're interested in learning about platinum. He's got a great video that he just put out this week on how to kind of buy and sell platinum coins, because as you know, especially if you're a more seasoned stacker, it's not as easy to get into platinum, and it's not as easy to get out of platinum as it is gold and silver. Some of the reasons behind that are that platinum is more rare than gold. It requires a lot more for the mints to manufacture platinum coins, bars, and rounds, because the temperature required to get platinum up to its melt point is a lot higher than gold and silver. So it takes more labor to create bullion products in platinum. Platinum is about 10 times more rare than gold, but platinum is very much so tied to industry. Platinum is kind of a sleeping giant. I saw that comment from Silver Britches. Got to give that to him on Platinum Stack's channel. And indeed it is, because once upon a time, approximately 10 plus years ago, platinum was actually valued higher than gold. Nowadays, a gold American Eagle goes for about $2,100, maybe a little less, $2,000 to $2,100 to convert your fiat currency into this gold 1 ounce American Eagle. Whereas this platinum American Eagle, if you look closely, you can pick one up for about $1,200. Now, there are cheaper options out there. The American gold, silver, and platinum Eagles do go at the highest premiums here in North America. I think that's pretty much worldwide. You can pick up Canadian platinum maple leafs, Australian platinum kangaroos, etc., that are a little bit cheaper to get into, but may kind of create a little bit more of a difficult situation when selling. All right, so to the point, platinum has higher premiums due to many reasons. One being its rarity, the labor required to manufacture it, but it is definitely an opportunity metal right now, especially during these low interest rates and soon to be inflationary periods. So thank you, Platinum Beast, for sending me these stickers. Let's go ahead and get to the letter. Dear Florida Stacker, thanks so much for selling me the Britannias. I've included a couple of stickers for you. Enjoy, your friend, the Platinum Beast. Well, you're very welcome. And for those of you that are not aware, I did have some fractional Platinum Britannias that I did sell to the Platinum Beast. And I'm going to take those proceeds and I'm going to roll those directly into a 1 ounce platinum purchase here pretty soon. I've almost got the fiat in my account saved up for it. I'm looking to try to spend no more than about $1,000. I don't think that's going to be able to go down. Given the latest market news, I think I'm going to end up spending closer to $1,100 to convert that fiat into platinum. But here's hoping. So I've got my eyes out. I'm looking for my next 1 ounce platinum purchase. Well, all right, everybody, that concludes today's video. Thank you for tuning in to the Florida Stacker Show. I'll have another episode out for you next weekend. It does take some time to get these together. I do appreciate your patience. Please do, if you have not yet, consider subscribing to this channel for up-to-date market analysis and information on precious metals, as well as a little bit of dividend investing now that we've mixed into this new Florida Stacker Show. I hope you enjoyed the video today. I hope that you can reach out to all these great channels that sent mail in, the Inefficient Stacker and the Platinum Beast, and support their channels as well as learn from them. And I also hope that you are all staying safe, planning for your own personal financial futures, and keeping your eyes towards the market. All right, thanks again, everybody. Once more, please consider subscribing. I'll see you again soon on another Florida Stacker video. Take care, my friends.